Hey traders, welcome to another webinar. My name is Mike Sir. In our last session, we introduced you to pair trading, explained to you how pair trading works, the benefits of pair trading, and how you can identify and profit from pair trading opportunities. Now, more importantly, we showed you step by step on how the GainTrade program and the AI powered bot makes pair trading easy for you. So in today's webinar, we're going to dive in a bit deeper and go into more detail on 3 pair trading strategies that can help you make a profit. Now we'll go through some live trade examples with you and show you how the GainTrade AI bot identified these opportunities so you can understand how and why these bots made these trades. Now make sure you stay until the end as we'll share several tricks that can help you improve the profitability of your pair trading. So let's get started. The first strategy that we want to share with you is a popular pair trading strategy. It's where you choose 2 stocks that are in the same sector and also have a similar weighting in the stock market index. Now, an example of this is Microsoft and Amazon.com. Both are technology companies and both are components of the NASDAQ 100 index. Now you can see here that Microsoft has the second highest weighting in the index at 9.409, while Amazon.com holds the third highest weighting at 5.167. Now this tells us that these 2 stock prices are probably highly correlated with each other, and if you look at the charts of both stocks, you can see that they generally move in the same direction. However, their stock prices starts to diverge as Amazon, which is the turquoise line, sees a spike in its stock price, while Microsoft's stock price, which is the orange line, stays relatively flat. And this is where the AI bot recognizes this and opens a position on May 10th to short the pair, meaning to sell Microsoft and buy Amazon. Now you can see here from the chart, S stands for sell to initiate a short position, and B stands for buy to exit the short position. And this results in a quick 1-day profit on May 11th as the pair goes down in price. Then the AI bot continues to recognize strength in Amazon and relative weakness in Microsoft, as highlighted by the arrows where the Amazon stock is going up while Microsoft stock is staying relatively flat, or where both stocks are going up but Amazon's price is going up faster. Now you can see that over the next 4 trades, the AI bot shorts the pair to go down, and you can see these 4 trades has referenced by the sell positions, and then taking profit has referenced by the buy positions. Now in these trades, you could have adjusted the take profit level to be even lower to recognize bigger profits. Now you can see the profits from these 4 trades here. Then on June 6th, the AI bot recognizes that Microsoft might start to outperform Amazon, and you can see on the chart here that indeed Microsoft's price starts steadily going up while Amazon's price goes sideways. Now you can see that the AI bot buys the pair to go up, as referenced by the buy position, and then taking profit has referenced by the sell position. Now in this trade, you could also have adjusted the take profit level to be even higher to realize bigger profits. As you can see for the rest of the trades, the bot is able to take advantage of divergences in this generally correlated pair, opening up trade positions to buy when it reaches the open position bottom, and opening up trade positions to short when it reaches the open position top. Now here you can see all the profits generated by the AI bot. The second strategy that we want to share with you is for those who like to trade the oil and gas sector. Now it's a perfect pair trading strategy where you identify the leader in the sector and compare its stock performance relative to another oil and gas company. Now both stocks tend to move up or down based on oil and gas prices, but what we're looking for is to see whether the market leader's stock price outperforms its peers. In this example, we chose the company ExxonMobil, which is the market leader and has the highest market capitalization of any oil and gas producer worldwide at $352 billion. For the other oil and gas company, we chose Enterprise Products Partners, which has a much smaller market cap of $57 billion. Now, if we were to compare the stock charts of ExxonMobil, which is the turquoise line here, and Enterprise Products Partners, which is the orange line, we can see that at the beginning of April, Enterprise's stock price outperforms Exxon's, And if the strategy is set to return to average, we will look for Enterprise's stock price to underperform while Exxon returns back to its leader position. Now this means that we will look to short the pair to head lower. Now you can see here at the open position top, the bot initiates a sell position, but the pair's price continues to head higher. Now fortunately, the trade didn't hit its stop loss, and finally the price starts heading lower as Exxon's price starts to outperform Enterprise's, and then it reaches its take profit level. You can see that for the rest of April, ExxonMobil's stock price stays relatively flat while Enterprise's price starts trending lower. You can see that the AI bot recognizes this and starts shorting the pair to head lower, meaning to sell Enterprise while buying Exxon. Now here you can see all the trades and profits that the AI bot made in April. However, in May, things revert back to Enterprise outperforming Exxon, as you can see in this chart. Enterprise's stock price goes up while Exxon's price heads lower. Here you can see that the AI bot puts on numerous trades to buy the pair to head higher. And you can see the trades and profits that the AI bot made in May. As mentioned earlier, we set the take profit line to be a bit more conservative, but if you're looking for bigger profits, you can monitor the pair trades to set a higher take profit level or move up your stop loss orders. Now, please keep in mind that even though the AI bot calculates the probabilities for you and executes all the trades, it's not a set it and forget it type of bot. You do have to manage your trade positions, especially if you want to minimize risk and maximize your profits. The last pair trading strategy that we want to share with you is where we look for strong correlations between a company's stock and a stock market index. And one way is to look for stocks that have strong weightings or are a part of a stock market index. Now, generally, if the stock market index is going up, then the individual stocks inside that index will follow. However, when they don't, this offers an opportunity for pair traders to profit. For example, we chose the company stock Vertex Pharmaceutical, symbol VRTX, which is a component of the S&P 500 index. Therefore, we want to compare the price performance of Vertex to the ETF that tracks the S&P 500 index, which has the symbol SPY. Now, even though Vertex Pharmaceutical only has a less than 1% weighting in the index, we want to see if there is a positive correlation between the stock and its index. So let's look at the charts. Here you can see the stock performance of Vertex in the yellow line, and the bottom chart below in the blue line is the S&P 500 ETF. Now you can see visually that they generally move in the same direction. So what we want to look for is a scenario when they are not correlated and we expect them to revert back to its mean. So now let's see what opportunities the AI bot has identified for us. On June 1st, the bot identified an opportunity to buy the pair, which is to buy Vertex and short the S&P 500 ETF. Now this resulted in a profit the next day when the pair went up in price. Now, if we were to look back at the charts, you can see that Vertex stock was going down while the S&P 500 ETF was going up. Then, if we were to go through all the opportunities that the AI bot has identified and executed for us, you can see that there are specific time periods that the stock and the ETF diverge and then converge, resulting in profits for us. And this is really the power of the AI bot to help us identify and execute those trades for us. Here you can see visually how in certain time periods, Vertex and the S&P 500 ETF diverge from each other, whether Vertex outperforms or underperforms the S&P 500 ETF. And this is a perfect strategy for the return to average setting. Now that we've discussed various pair trading strategies, here are some tips to improve the profitability of your pair trading when you're using the GainTrade program. So the first trick is, when considering which pair to trade based on your risk tolerance, you should look at the side ratio of each pair. Now, as I mentioned, this is the ratio of the price value of the first stock divided by the price value of the second stock in the pair trade. Basically, it tells you the weighting of each stock in the pair. Now, there are three options that you can consider here. The first option is to use whatever the AI bot suggests, as it has already calculated the optimal correlations based on the price. The second option is to look for a value closest to 1 since it gives equal weighting to each stock and the most optimal balance. And this is generally the best for traders who want the least amount of risk. The third option is based on the classical hedge fund ratio that was developed by the so-called father of the hedge fund industry, Alfred Winslow Jones. Now his model is based on being 65% long and 35% short. Therefore, the side ratio that you want to look for is either 0.35 or 2, depending on the first stock. Now, whichever option that you choose, make sure you don't choose a pair that has a side ratio above 2. And this means that there is a heavy weighting on the first stock and could potentially lead to a directional position. More importantly, it will remove the hedging advantages of pair trading. Tip number 2 is whether you're pair trading or directional trading, you should always look to manage risk. And here are a few risk management tips that we want to share with you. The first one is if the strategy and the pair that you have chosen has resulted in a loss, then most likely the original correlation has disappeared and the pair trade will no longer work. This means that you shouldn't trade the pair anymore or move the stop loss order in the hopes that the trade might work. It's better to focus your energies on finding the next opportunity. Another tip is to run several strategies and pair trades at the same time because it will actually increase your chances of success while reducing risk. Now, the simple reason is like in directional trading, you don't want to put all your eggs in one trade in case that it doesn't work out for you. Now, like hedge funds, you want to utilize a portfolio diversification strategy where you run numerous strategies on various pairs rather than concentrating your entire capital on one strategy or one trade. When trying to determine the best pair to trade, there are a few things that you can look for. Now, one is to always look at the charts of each stock individually by clicking on the show asset. Now, if one stock is steadily trending up in one direction, while the other stock is steadily trending down, and you don't see any clear correlation between the two stocks, then it might be a pair that you want to avoid trading. It might be a scenario that there is clearly no correlation between the two stocks, or there could be a major catalyst that is driving one stock to be stronger than the other, and that the probability of the pair reverting back to its mean would be very low. So you want to look for pairs that have some history of being correlated with each other. Another thing to determine the best pair to trade is to look at each stock's RSI indicator level. Now, for those who don't know the RSI, it stands for Relative Strength Index and measures the magnitude of recent price changes to analyze if a stock is overbought, which is a level 70 or above, or oversold, which is a level of 30 or below. Now, if a stock reaches an overbought or oversold extreme level, then there's a high probability of a reversal. Therefore, if you're looking for a stock pair to return to its mean or average, you want to see if one of the stock pairs is overbought or oversold. Thanks for watching this webinar, and we hope you learned a lot about the pair trading strategies that we discussed. Now go right ahead and open up a free paper trading account now so you can test out the pair trading strategies and try out the little tricks that we've covered in this webinar. I'll see you all in the next webinar.